The major averages ending the week in the green. The S&P 500 logging its longest winning streak since 2004. But large asset owners increasingly worried about three key risks to the market, according to a new study from Mercer. Let's bring in Olaolu Aganga, Mercer U.S. Chief Investment Officer. Olaolu, great to see you as always. Okay, geopolitics, inflation, monetary tightening. If people with a lot of money are worried about those things, what can they do?
Firstly, I'll say being doom and gloom after such a positive week is really not the best way to end. However, we do follow these trends, right? So the survey that we use, and I think we've talked about this before, is institutions that have over $2 billion in assets. 14 countries, so very, very global body. We have 75 institutions that are represented, $2 trillion worth of assets. So we follow this to be able to get a sense for the trends that they have. And some of the concerns, yes, geopolitics, inflation, monetary tightening, that makes sense. They had 12 risks, essentially, that we looked at, so volatility in markets, climate change, those things. This showed up as the top. And it makes sense given the background that we've had thus far. The positive, though, is that we also looked at where they're looking to invest, where they're looking to allocate capital. Private markets, despite geopolitics, inflation, and monetary tightening, private markets was still top of the focus areas, with private credit and infrastructure showing up within their allocations. It was more of a balance. It was more defensive. So private markets, yes, but those asset classes are defensive.
Are they looking to sell America?
We did see a little bit more of a home bias in the data, and this was coming from European institutions. So we saw European institutions were more positive on their European domestic markets, and this was in contrast to U.S. and some of the other areas. So the home bias was increasing, but it was increasing from European institutions for their markets.